Welcome back. Now, Finance Minister Enoch Godongwana delivered his highly anticipated budget speech on Wednesday. Although no major changes were made to tax, Godongwana and National Treasury were forced to tap into South Africa's gold and foreign exchange contingency reserve account for the first time in 2 decades. Joining me now is Director of Global Compliance, Product Management at Sage, Yolandi Esterhuizen. Yolandi, thanks so much for joining us today and just helping us unpack the budget further. Now, as we get started, as I said, the minister didn't make any big changes to tax, but there was a sneaky hike through the bracket right at the top. Just explain to us what this move means.
Well, firstly, thanks for having me. I must say, I think a rate increase, obviously, that could always affect our economic growth, and we know we need our economy to grow. And I think a lot of the people, when they first saw the budget speech and that there was no change in the tax brackets and no increase, they sort of assumed that they were not going to be affected, which we know is not the case. We will actually now pay more tax due to the bracket creep. So basically, if you now earn a salary or you get an increase in line with inflation, and now because the tax brackets were not adjusted in line with inflation, you will probably pay more tax, and you might even be pushed into a next tax bracket. Now, it was interesting actually to see that only this change alone would assist the government to basically raise 16.3 billion rand, which will probably help a little bit with our revenue or our deficit. There was an interesting research done by FTI Consulting, actually just an article that I read this morning, which basically said that in the supplementary documents of the budget speech, it was indicated that there will actually not be an increase for at least 3 years. Now, that will have a massive impact on all taxpayers if the brackets aren't adjusted in line with inflation. But they must have hidden that somewhere in that speech or in the supplementary documents. I'll definitely later on go and search for that indication, as was noted.
So some pain for South Africans, especially in a year where we've been dealing with high inflation and slow wage growth. Now, surely this will impact the low and middle class earners.
Absolutely. I mean, yes, as you rightly mentioned now, there's already, the wages are low, the economy is struggling, they will definitely now pay more taxes. But I think a bit of a relief is that it hasn't been increased. So it could have been worse. Absolutely. The fact that there was no VAT increase, that we know always affects the low to middle income earners more. So I'm relieved in that sense, but I think everybody must realize that our pockets will still, feel the impact of the tax brackets not being changed.
Now, the highly contested NHI bill has been allocated 1.4 billion rand. This just shows government's commitment to this plan, despite the backlash it's been receiving from big businesses. What I want to get is the concerns employers and employees would have regarding the potential impact on the overall healthcare expenses.
Absolutely. I think although the president seemed ready to sign the bill during the State of the Nation, we all know that there are so many concerns, and funding is definitely, I think, one of the major concerns. How will it be funded? And, we know that payroll tax is an option for funding, but we still, after so many years, we still don't have any idea as to how much it will impact employers, employees, either or both of them. So, and we need to plan. We really need to plan for those taxes. So will it be a percentage? Will it be a fixed amount? So it's definitely still a concern as to how it will be funded. And I think on the question on everybody's mind is basically, will I be able to afford a private medical aid if I will still need that? And if I do need a private medical aid, will I be able to afford the private medical aid as well as to assist the funding with NHI? Now, the research that was done by FTI Consulting is they basically estimated that every employed individual will have to basically contribute or pay more or less 1,500 rand per month in addition to public funding to actually fund NHI. So Will they be able to afford that? I don't know. I was actually a bit surprised, and I expected that during this budget speech that our medical tax credits that we get on a monthly basis might have been reduced, as was mentioned previously. So I sort of expected that to happen, just as maybe a phase-in approach to start with the funding, because we know ultimately that is going to be taken away, but as a starting point, just for the funding, because we need a lot of funding for NHI.
I guess we also have to think about the politics of it all, considering that they were delivering the budget in an election year. Now, another issue that made headlines throughout 2023 was the two-part retirement system. And I just want us to delve into the implications of the introduction of the system. Yolandi, what challenges does the retirement industry anticipate? And how are they preparing for potential revenue impacts and compliance requirements?
That's a very good question. And I think, just to put it into perspective, it was supposed to be implemented initially March 2024, got postponed to March 2025 again, and then moved earlier now to September 2024, as we heard in the budget speech. And it basically means that contributions now, when you contribute towards a retirement fund, 1/3 of those contributions will go into a so-called savings pot or savings component, which will be accessible before retirement. And then you'll have your 2/3 that will go into a retirement pot, which you won't be able to access before retirement. And the main reason for this was due to the fact that people were resigning from their jobs just to get access to these funds. So great initiative. The fact of the matter is that means that from the 1st of September, people will be able to withdraw money from their funds. Now, that in itself will attract tax. They estimated a 5 billion rand revenue just because these withdrawals will be taxed at your marginal tax rate. Now, I can just imagine the amount of work that the retirement industry must have done in terms of processes, communication, etc. And I think that's why initially the industry wanted more time, because they have to keep track of old contributions up until, let's say, the 31st of August, because that will still be governed by old legislation. Then they will have to keep track of the new contributions from the 1st September and how many withdrawals are there, because if you can withdraw once a year, every tax year, it's quite an administrative process. And I think there's a lot of pressure, I think, on the industry to be ready for this change. From a company perspective, or business employees, there's not as much of an impact in terms of policies and compliance, etc. But I think what is important is for employers and companies to communicate, to advise their employees, and just educate them on the impact that this will have. That yes, you will have access to your money, but you shouldn't necessarily withdraw it. This will have a massive tax impact too. So we still need to save for retirement. So don't withdraw your money. It wouldn't be the responsible thing to do. So I think that's more of a communication and educational aspect of the two-pot retirement system. I think it's a good system, but we need to just use it responsibly.
Yes, it's all about educating everyone that they still need to save for retirement despite the system being put in place. Now, the minister has continued to emphasize the importance of small business and how they contribute to the economy. However, not much was really said to boost these businesses. So what can the powers that be actually do to help SMEs in this challenging environment?
It's indeed a challenging environment. And I think, there are incentives available to businesses, definitely. But, and I mean, just to take it one step back, as we said, our economic growth is definitely priority. If we improve our economy, then it will lead to a reduced unemployment rate. And yes, and these are some of the obstacles, and there are incentives that the government is using or making available to overcome some of these obstacles. But in my opinion, I think some of these incentives are a bit complicated or not utilized fully. For example, if I just take the employment tax incentive. The employment tax incentive is a great initiative where employers can actually, if they employ the youth, they, depending on what they pay that person, they can get some of it, and as cash or basically to reduce their pay and liability, and they can use that money again to employ more young individuals. So it's really a great initiative, but the administration thereof is quite complex, and some of the calculations and the legislation could become a bit complex. So I think because of that, a lot of employers choose to not participate in this scheme just due to the risk of being non-compliant or getting anything wrong. So I think at the end, yes, although there are great schemes in place, I think simplification is the key. If we can simplify, it will improve participation at the end.
So I guess all in all, it's making things understandable and bringing them down to the regular South African on the street. Yolandi, thanks so much for your insights and for joining us today and just unpacking the budget today. Thank you. We really appreciate it. That was Yolandi Esterhuizen, Director of Global Compliance Product Management at SAGE.